Namaskar friends. Today we are going to see wage codes continuation. In our series of labor law, we now take up the payment of bonus to workers. Never assume the bonus your company gives you is the bonus that law says you should get. Most people are getting it wrong without even knowing it. Today we are talking about the real rules behind how your annual bonus is supposed to be calculated under the labor code. And trust me, once you understand these rules, you will know exactly what you are to be paid, when, and why companies cannot just make up numbers. Let us start with the foundation. The law says that if you have worked at least 30 days in an accounting year is April 1st of the current year to March 31st of the next year. So the previous year, if you have worked 30 days, starting from April 1st of last year to the March 31st of current year, and you earned within the wage ceiling notified by the government, that is 21,000 per month, you must receive a minimum bonus every year. That is, the government has fixed salary of 21,000 maximum for people to be eligible for receiving bonus. Okay, you have worked only 30 days, then again you are entitled to 30 days in a whole year of financial year, that is April 1st to March 31st of the. So minimum 30 days service, that is 1 month service in a whole year, in a whole financial year, will make you entitled for payment of bonus. And this bonus equals to 8.33% of the wages you earned that year. That is, if you have earned all the 12 months, 1 month salary should be paid as bonus, minimum 1 month salary. Okay, now 1 month salary, suppose you get 20,000 salary, will we get 20,000 bonus? No, we have, for bonus calculation there is one more ceiling they have fixed to support the company owners, employers. We'll see all those things also. But the thing is, if you have worked entire year, 12 months, 1 month salary, in the sense, the ceiling fixed by the government must be paid to you as bonus. We are going to see all those calculations now. So 8.33 is nothing but, 8.33% is nothing but 1 month wage calculated based on the annual wage. Okay, so you will get 8.33% of the wages you earned last year, or 100 rupees, whichever is higher. So the 1 month salary should not be less than 100 rupees. They say 100 rupees is nothing nowadays. These are all again the ceiling. Though this is a new code, 100 looks negligible and they should not have put that money here. Let us see what is in store in the further conditions. Now, this bonus of 8.33% must be paid whether the company made a profit or not during the previous year. This rule is non-negotiable. They cannot change. So company cannot say we have incurred loss, we will not pay bonus. No, they have to pay. What are the conditions? Let us see. But these conditions are normally the people often overlook. If your wages are above the limit set by the government, your bonus will not be calculated on your actual wages. This is what I told you. 20,000 if you get every month, will you get bonus of 20,000? No. For bonus calculation, they have put one more limit, as monthly limit is 7,000 rupees. Now, as of now, it is 7,000 rupees. It might be revised. This was fixed very long back, maybe 10-15 years ago. Prior to that, it was 3,500 only. That was raised 7,000 some 10 to 15 years ago. Now, there is likely this 7,000 will be revised. As of now, since they are not revised so far, so the bonus ceiling, monthly bonus, that is 8.33 value, is 7,000 rupees. Suppose you get a month minimum 15,000 rupees. So your bonus as 8.3 will be 7,000 only. This is what it means. Now, the minimum wages, let us say, government fix. Now, every state government has to fix monthly minimum wage, hourly basis, daily basis, weekly basis, and monthly we are calculated. Even hourly, you have to calculate for 8 hours and for a month after removing holidays. So that is a monthly salary. So that, let us say, the minimum fixed by government is now, let's say it is 10,000 rupees. Then the bonus ceiling, the minimum, is not 7,000, it is 10,000. Only that condition. So it cannot go below the minimum wages fixed for the particular worker by the local government. Anyway, bonus eligibility I already told you. Eligibility monthly salary of 21,000. Your salary is basic pay and dearness allowance only, not other allowances. Okay. This 7,000, why this values fixed something 7,000 are only up to the level of minimum wage for paying bonus? Very simple. The system is proposed to be made fair and sustainable for the company owners too, because they are sharing from the profit. So the government says we will put some minimum wage range. That monthly wage should be paid as 8.33% bonus. So the maximum bonus is up to 20%, we are going to discuss now. So 8.33% bonus shall be paid whether the company incurs profit or loss. Even if they incur loss also they have to pay. There are certain conditions. We are going to discuss those points also. So now this ceiling, now you will understand why this is a ceiling of 7,000 as of now. It's going to be at least minimum wages when the government will notify soon. Every state government will notify soon. So that will be the minimum bonus to be paid by the company, not for newly launched companies. Those rules we are going to discuss. The company which are doing business more than 5 years. So there is the question of incurring loss does not arise at all. They have to pay bonus even if they incur loss. Okay, now other side of the coin. How they calculate? The company sometimes have a great year. Sometimes the company earn more profit due to various external factors. Sometimes the earnings might be very low. Even at times the company may incur loss also. So you can't say the company earns profit every year without fail. It all depends upon so many factors. Okay. Now, when the company have got great profit and other things, so there are certain calculations. What are those things? When the allocable surplus is higher than the minimum bonus amount, your bonus must go up. That means, what is allocable surplus? We are going to discuss now. Before that, the minimum bonus is the 1 month pay of the employee as a full bonus minimum. Now take it as 7,000 only till the minimum wages is notified. So for every employee, 7,000 is the minimum to be paid as 1 month salary, assuming that he has worked the whole year. And all the employees, whatever value that comes, that from the profit they work out the allocable surplus. If that is more than this value, bonus has to be increased. Up to what level? Up to 20%. Assuming that a company pays for 100 people bonus, 7,000 each. So that is something like 7 lakhs rupees. 7 lakhs rupees is paid as bonus. Now let's say these 100 people were working and all the 100 people are getting full bonus, that is minimum 1 month bonus, and allocable surplus, that is profit value, is now assuming that is 14 lakhs rupees. So 7 lakhs is 8.3. They have to pay double. Yes, because the allocable surplus will be added to the bonus only with a limit of 20%. So you can't go beyond 3 months salary or something like that. Little less than 3 months salary. So if the base value is put as 7,000, you will get some 16,000 plus the maximum bonus. So remaining what will happen? Let's see. So there are certain balancing act in this, because one cannot expect that company will always do better things. So there is likely to be ups and downs. So that is why all these concepts we are trying to discuss all those things. Okay. The employee needs to pay bonus in proportion to wages up to a maximum of 20%. I have told you now. That 20% is the ceiling. Beyond that, bonus cannot be paid. Okay, no one can get more than that under this code 2019. To understand this, you need to know what is allocable surplus. Imagine a company's gross profit as a big pool. Out of this pool, some amounts get subtracted first. Why? Because you take the revenue, you take this expenditure for all the company's related things, then that is the gross profit. In that, you have to deduct for depreciation. Why depreciation has to be deducted? You buy machineries. Machineries are not lifelong. They work for some 10 years or so. So after 10 years, you have to buy a new one and do it. Where will the money come from? So you have to, initially it was invested. Now from the business, the depreciated value is kept aside for buying future machineries. So machineries, you spend hugely initially. That assuming that works for 15 years. So the depreciation will be calculated accordingly. There are certain formulas. We will discuss separately in that video, but now some amount have to be kept aside under depreciation and direct law taxes. Naturally, for profit you pay tax. That money has to be removed from surplus. Now, other approved charges. There are many kind of things which are all allowed, even for advertisement, many things. So all these approved charges in the formula provided by the government, that will be removed. After all that, what remains becomes the available surplus. So there is now you get some available surplus. From that, a part of that will be removed as allocable surplus. That is 2/3 of the available surplus. Suppose you have say 20 lakhs rupees surplus. So 2/3 is nearly 2/3. Some 14 lakhs will be paid as bonus only, because that is allocable surplus. But this amount will not go beyond 20% of your bonus. Remaining will be kept aside as a set on. We will discuss that also. For this 2/3, 67% or 2/3 is for all the establishment except banking companies. For banking companies, 60% of the available surplus will be treated as allocable surplus. And for other companies, as I said, 2/3 or 67%. Okay. This number decides whether the employee gets the minimum bonus or more. Why minimum bonus? If there is shortfall, if there is no profit, then at least minimum 8.33% bonus must be paid. When there is more money, your bonus gets increased. That increase will be limited to 20% only. For 7,000 value, cutoff value, I told you 16,000 plus. Okay. Now, profits rise and fall. So the law introduces something called set on or set off system. So when you have more allocable surplus, after paying the money, remaining will be kept aside as set on. Money kept aside for bonus requirement of future years. and such cases can be kept for 4 years. In the 4 years, whenever there is a shortfall, that money is taken as set off to bring the bonus level at least 8.33%. So company is not made to incur loss by this compulsion of paying bonus of minimum 8.33%. So the set off and set on process is for making the company viable for making bonus also. That is, you keep aside the more money when you receive, pay up to 20% and pay up to whatever is required, and keep something for unforeseen or loss making time, when that money will be used as bonus payment. Okay. So if there is extra allocable surplus this year, more than what is needed to pay the maximum bonus, the extra amount gets stored for future years, called set on amount. If a future year is a shortage, the company cannot meet even the minimum bonus, the stored amount can fill the gap. That is called set off. These adjustments can continue for up to 4 accounting years. Think of it like a balancing act that keeps bonus payments steady even when profits move up and down. But what about the new companies which have been started now? The first 5 years after they start the business, the employers must pay bonus only in years when they actually earn profit, first 5 years, because they did not take loan and pay the bonus. If there is no profit, of course, no bonus is required. It's only for the new companies. And when they do earn profit, the bonus is calculated without applying set on or set off. So when they earn profit within that first 5 years, forget about our set on or set off. You calculate that and pay the minimum bonus and other things. Okay. But for the 6th and 7th years, the calculation starts. 5th year is onwards, it is taken for all set on and set off, allocable surplus, etc. First 4 years earnings are ignored even if they have profits. That is all. 8th year onwards, it is normal rule. But because 4 years you take into account, we already discussed this set on and off process is valid for 4 years value. An amount kept this year will be or can be used up to 4 years only. So you start this calculation from 5th year onwards, 5th, 6th, 7th, 8th year, then it becomes normal. Then future cases, it is not a new company. Normal rule applies. Set on and set off procedures should apply. Okay. Let's fast forward to employees who didn't work the whole year. Suppose now the employee did not work whole year. What will happen? The minimum bonus gets reduced in proportion to the number of days they actually worked. As I already told you, at least 1 month if you have worked, you are eligible for bonus. But you can't expect a full bonus. Full bonus minimum is 8.33% of the annual salary, which is 1 month salary. So you have worked only 1 month. So that will be divided by 12. So it is, because 12 months you get 8.33 bonus. So what it means is you get pro rata bonus. Okay. What does mean by worked? The worked period. It has a broader meaning. It is not just only the period when you worked. It also adds all the paid leaves. So you are granted leave and payment is made there. So it is considered to be worked period. Important point. And some employees are laid off due to whatever reason, legal rules or anything. Layoff is for a short period or whatever period. Maybe machine down, so they have made a temporary lockdown or layoff or whatever you call it. But within the legal framework. That period will be taken as duty, worked period, for calculation of bonus. And days of temporary disability due to workplace accident. Suppose an employee meets with some accident and he cannot work for 10 days or 20 days due to accident happened during work, due to the work. Then that period will also be counted for bonus purposes. And of course, what not, maternity leave granted to women employees. That also counts as period worked for calculation of bonus. Okay, these days are protected because the absence in these situations is not optional, because it is compulsory. Okay, but now the other side. Bonus is not for everyone in every situation. The law says bonus must not be granted to an employee who is dismissed for fraud, violent behavior inside the workplace, theft, misappropriation, sabotage, or for being convicted of sexual harassment. These are all conditions. When the employee is dismissed, he loses his right to receive bonus for the previous year. And all of them are usually treated as one establishment. What does that mean? That is, suppose a company has got many branches, many departments. So for bonus calculation, entire organization should be treated as one unit. Reason is, the marketing or selling unit will have more revenue. But there are certain units like HR, human resource. They will be incurring loss only, because for them income doesn't matter. It is only they hire the people, pay the salary or whatever it is. So particular section they may not get profit because it is expenditure only. Oh, this section does not get profit, so we should not pay bonus, or minimum 8.3 will do well, while others get 20% is wrong. So entire organization is taken as a whole to calculate overall profit and loss, and payment will be according to their salary, that I agree, but not according to their section where they work or branch where they work. But the exception is, if the company has got multiple branches and balance sheet is made separately for each branch, that means they have separate tax calculation, everything, then such branches will be treated as separate entity for calculation of different bonus. So that is all exception, because the company itself makes entire setup as whole separately for balance sheet preparation also. So that way they can have more than one type of a company can have based on the branches also. Now we look at how gross profits themselves are calculated. We already told, in briefly we will see. Central government prescribes the specific methods. Banks follow one method. All other establishments follow another method. And after that, deduction, as I told you, for depreciation, taxes and all other allowed charges are deducted to calculate the available surplus. So from the available surplus, you take allocable surplus of 60% for banking industry, 67% for other industries. But while calculating all these things, direct tax calculation have their own rules. Carried forward loss don't get considered here. For tax calculation, carried forward loss can be taken into account, but for bonus calculation you can't take it. Old depreciation that has not been claimed does not count here. You can't, last year depreciation I could not take it, now I will add it. No, they can't do. And of course, for charitable institution, the treatment is entirely different. Export profits don't get special rebate, so they have to take into account for bonus calculation. All of this helps prevent employers from reshaping their accounts to escape bonus obligations. There are also rules for situations where employers already paid a festival bonus or usual bonus during the year. Because bonus is normally considered to be one-time bonus in a year. If an employer pays well in advance, okay, that can be taken into account while making final bonus. That means bonus is allowed to be paid in installment also, depending upon the convenience. So such initial payments get deducted from the final bonus amount. If an employee caused financial loss through his misconduct, or the employer can deduct that loss from the bonus of that accounting year. The question everyone asks now is, when the bonus must be paid? What is the due date for making bonus? The law is very clear. The bonus must be credited to the employee's bank account within 8 months from the end of the accounting year. March 31st is the end of accounting year. So bonus to all employees should be paid before end of November of that year. In between, if they have paid something, they can adjust that and pay the balance. But bonus must be paid before end of November. Of course, employers can ask government for more time, but the extension cannot exceed 2 years. Why this extension? Suppose financial position is very weak. They will calculate the due, this much bonus, because minimum we have to pay 8.33%. For that also they don't have money. They can ask for some time frame from government for paying their employees. Okay, you give us some more time, I will arrange and pay. Government gives 2-year time. Within 2 years, that earned bonus must be paid. But suppose if the dispute is only about increasing a rate, the owner says, the employer says, this year profit is not more, so we will pay only 8.33. But employees say, no, you see your balance sheet, you have a lot of surplus, you have to pay more. So then there is a dispute in that. So it will go to, again, conciliation, other things. In such a case, it is not on payment of bonus, it is the quantum of bonus. So minimum of 8.33 must be paid, and then only case has to be referred for conciliation or arbitration or industrial dispute resolution, whatever it is. So here the employer says, no, we don't have much money, we will pay only 8.3. Employee says, no, you have more money, you have to pay us 20%. So there is a dispute. You take the dispute to dispute resolution, it takes some time, but before that first you pay 8.3, remaining will be based on the decision. After the decision is taken, after the award is granted, within 1 month the bonus must be paid, or the differential value of bonus must be paid, as the case may be. Public sector companies can follow these rules only if they compete directly with private sector and at least 20% of their income comes from that competitive activity. If they are monopoly, no. If they are having monopolistic authority and other things, this rule does not apply. Okay. There are other exemptions also, like employees of LIC, seaman, dock workers under certain schemes, government run establishments, government departments, universities, hospitals, the Reserve Bank of India, and some financial institutions. These are all outside this particular bonus rule. They will have separate rules. Institutions that run not for profit are also excluded from this rule. Of course, government may exempt any establishment whose employees already have a profit sharing arrangement that is equally or more favorable. Suppose a company has got kind of a profit sharing arrangement, not as bonus, but that is either equivalent to bonus value or more than that. Okay, government will exempt them also from paying bonus. Here is the real struggle. The most employees don't know any of these rules. They think bonus is a random gift. Many employers don't explain the calculations. Rumors start. Expectations rise. People compare bonuses between companies without understanding that everything depends on allocable surplus of that particular company, wage limits, deductions, set on and set off history, and profit calculations. The result? Confusion, frustration, arguments and sometimes legal disputes that could have been avoided. So here is the big picture. The labor code protects a minimum bonus every year. It allows higher bonuses when companies perform well. It balances this with caps and adjustments. It guards against manipulation by employer. It counts leaves, paid leaves, accidents and maternity as legitimate work. It blocks bonuses in case of serious misconduct on the part of employees. It sets strict payment timeline, that is within 8 months of completion of the year. It recognizes different types of establishments and it creates a fair bridge between employee expectations and employer capacity. With this system, nobody has to rely on rumors again. You now understand what really goes into your bonus. Namaskar.